All right. Well, we're here for a really interesting panel. The topic is From Gold Rush to Growth, Investing in AI's Real Value. I'm sure you've all been having conversations about, AI, investing in AI, scaling, all those things. We're going to talk a little bit about that in the panel, but I'm going to introduce our panelists. To start with, we've got you're sitting in different places, by the way.
Okay,
you confused me for a sec.
Oh,
I was like, that doesn't look like David Siegel.
There we go. Voila. Thank you very much. Thank you very much.
Dynamic.
All right, we've set the tone for this panel, so you can imagine what it's like. So here is David Siegel, co-founder and co-chairman to Sigma. Rob Heyvaert, founder and manager.
No.
Oh, sorry. Rasmus.
He looks like me, though.
No, sorry. Rasmus Rothe, co-founder and general partner, Merantix Capital. And then finally, Rob Heyvaert, founder and managing partner, Motive Partners. All right, thanks again for joining this panel. I think I wanted to start with the topic is investing in AI's real value. I think one of the conversations, it's 1.5 days at Davos, has been about how AI is now moving from it's all amazing to it's so tough to scale. And so I would love to just get straight to the point and get your views on technology is moving so fast. So why is it so difficult to scale? Why are there challenges around that? And maybe, should we start with you? Because you're sitting next to me.
Sure. Technology may move fast, but people move at people's speed. And so you can invent some wild new technology, but to get people to figure out how to use it and to be comfortable adopting it, that just takes time. And if you look at throughout the history of technology, it took quite a long time, for example, before telephones were widely used in business, even though it was obviously a great technology. And part of that is because people originally said, I don't want to use telephones. It will destroy the relationships. We have to just get together. People didn't want to do it. And so I think that that's being underestimated today. That, in the end, the customers of all this remarkable technology are they're going to take their time figuring out how best to use it. They may be uncomfortable. This is just a normal part of any kind of technology life cycle. I would say, by the way, that these days, people move a lot faster than they did even 20 years ago. So we shouldn't be too worried about it. Adoption actually, if people are more technologically sophisticated these days, and so they adopt things faster. But still, the limiting factor is us.
Rasmus, do you agree with that?
I think it's true. I mean, if we would just stop research where it is right now and just spend the next 10 years implementing what we have, technology-wise, the world will look incredibly different. So there is a big gap, and it's because we have to unfortunately deal with the real world. If we could, do everything just in research and make it happen there, now I guess it's getting even faster with coding support tools where everybody can write millions of lines of code. It's like that in itself, in its own bubble, works perfectly. But now we have to deal with the real world. It's integrations into legacy system, changing human processes. There's maybe some policy-related things. There's people with different incentives where some people maybe win, some lose with the tooling being adopted. And so we have to work through, but it's just a matter of time. And I think for a lot of the stuff, I guess, where language model stuff are good, which is traditionally maybe jobs you could also do in a home office, so which is about processing text, working with data. I think it will happen faster, and then maybe for robotics and some of the physical world stuff, it's even more complicated, takes a bit longer, but I think it's just a matter of time.
Yeah, Rob?
I think we're too impatient because we think in this was the year of experiment, now it's the year of proving. You have to think decades, in my opinion, to the points they made. It's people, it's legacy. And if you look at some stuff we've been doing for 20, 30, 50, 100, 200 years, so to change overnight because the technology can change, it's all about adoption, as you said, and about legacy. But I'm extremely bullish.
That's great, and it's such a nice way to kind of set the tone for the panel and be all optimistic about it. One thing I would love to kind of understand, and our topic is investing in AI's real value. How do you cut through the noise to understand what exactly is the real value? How do you assess that? And I'm going to open it up to three of you, whoever wants to jump in really first.
Yeah, I think nothing has changed there. It's about this ability to assess the future, and it depends on your risk profile, of course. But it's our job, or investors' job, to think through what is the art of the possible and which risk profile am I comfortable with. I think when we say, it's a bubble, I also find that really naive, because at the end of the day, it's the conviction somebody has that this company is going to grow or this ability is going to change the way industry works. So as a result, I think we ain't seen nothing yet, and it's okay because access to capital is the first building block to innovation, in my humble opinion. No, shouldn't give a founder too much money because we've seen that doesn't work very well. But still, at the end of the day, access to capital and flowing capital into ideas and willing to fail and then be able to say, I failed, but I'm going to go again, I'm going to go again. That is where true innovation starts.
Yes, I think, in fact, the way to get to the real value, unfortunately, will be to lose a lot of money. There's going to be a lot of experimentation. People should be prepared. A big chunk of it isn't going to work. I mean, that's just how innovation always is driven. And the failures that occur should not be interpreted to be, oh, well, the technology isn't any good. It's just part of the innovation process. I think that there are, today, maybe unrealistic expectations that everything's going to work, okay? That just can't be the case. And so I think that we're probably, I think we're probably in a pretty good spot because there's a lot of experimentation going on. I don't think that there's, I don't believe there's a shortage of capital that is being spent on AI innovation. There's quite a lot. And people are trying lots of different things. So we should all, look, it's going to be a bit of a wild ride. So many of the ideas people in this room have, for example, are not going to work. But that's okay because some of the ideas are going to be home runs.
And I think the cool thing is like the iteration speed is coming down, right? Like back in the days, you would spend like a few months building a prototype. You would iterate the customer, like do that 4 times until you hit some more product market fit. Now you can like do that in a few days and like iterate very quickly. So it's almost this customer access is almost more important, both for B2B, it's a bit more complicated than for B2C because you can just put it out there. But I think that increases capital efficiency because you need much less capital at the beginning to try things out and see if there's something. And then obviously fuel it with money as much as you can to grow it as quickly as you can. But I think that is new to AI. And I think that's also what, I guess, investors, we also try to get our head around because now everybody can show up to like an investor pitch with like a working product and basically, some nice slides that are super polished and great market research and a fully crowded data room. You can probably create that tonight if you want and pitch tomorrow and it will look good by like standards like a year or two ago. And so I think that makes it a bit harder to then like really pick out the winning teams. But again, it's also about, doing 10 investments, 9 will lose money, 1 will make a ton of money and then investors are happy.
Yeah, and it's my wish or our wish that we continue to see access to capital. Because I think if you look at the United States for what they are, why are they so robust in everything they do on innovation? Because they have kept putting money into new ideas. And I'm worried that suddenly somebody's going to say, AI is a bubble, I'm going to stop providing it with capital. So our biggest job is to continue to promote entrepreneurs and to give them access to capital and to allow them to fail and to have countries outside the United States to be much more active in providing capital because that ultimately is going to drive innovation in the future of any country or any community for so far.
Yeah, one way that, I think you can frame a lot of this AI investing at the moment is like a question that you could pose is AI a normal technology or is AI something unusual and will behave differently? And what I mean by that is, so if you kind of subscribe to, the superintelligence is around the corner and that there's something about this technology that makes it very different from every other technology, that will lead to one way to think about investing. It may, make you, take risks that you shouldn't necessarily be taking. But on the other hand, if you think of it more like, I don't know, like the internet or, other innovations, and then it kind of leads to a more realistic view of how long it will take for AI to be deployed, what sort of innovation that you should be exploring. My mind is, that AI is kind of more normal than a lot of people think, and that it's going to follow, I think, on an accelerated time frame, but follow the normal sort of process of, certain numbers of these things succeed, some of them fail. It takes a while for people to figure out how best to use it.
Yeah.
There are all of the problems that you have with every other technology.
Yeah. I want to come back to what you said about, founder pitches, because I think that's very interesting. Would you walk us through, and maybe please feel free to jump in, Rob and David as well. When you look at these pitches, what are the red flags that you're seeing? How are you assessing some of these pitches? Because as you said, some of these can be put together very quickly, right? But how do you kind of go around assessing it?
I think like the one thing is if you go to like a deeper domain and like some vertical, like I think we look at the team and like, do they understand the problem very well? Because again, that might be very on the surface. Like, is there some unique insights if you go into like the industrial or the fintech space? Like, I think there is enough capital and teams out there that these spaces are much more competitive than maybe like 20 years ago. So it helps to kind of understand the problem you're solving. And I think the second thing is if, people are presenting kind of more research or like a pure AI edge, like also thinking that through the end, because there's a lot of people out there kind of developing models. So can you stay at the frontier of like hiring talent, and also does the CTO, so to say, like not just build the best things but also attract the best talent, and also is comfortable, like if somebody else builds something better, like pivot, and has this humbleness to like throw it away, which is not always easy when you think about like, I was in my research myself when you love what you've built yourself. So I think it's a lot, it comes back a lot to the team. And so that's why we try to spend just a lot of time with them, because the reality is the technology is so dynamic, there's so many open questions. That's why also people, I guess, talk about bubble and uncertainty and everything, that nobody has all the answers. And so it comes back to the core point of like having teams that are very dynamic, to understand what's going on in their domain and on the technology to kind of be adaptive to it.
I was going to agree with you completely and add in, essentially you have to assess, I think what you're saying is how much technology risk is embedded in the plan.
Yeah, and is it a feature or is it a company? One of the things that is the downside of innovation is that a feature gets confused by being a company often, and you'll see that companies can adapt. And I think we should not underestimate existing companies being able to reinvent themselves to put some of those startups out of business versus the other way around. And I've seen it many times where something hot comes along, wealth and asset management, we're going to do this and this, and turns out that it's copycatted very quickly from a legacy player. So that balance of finding the team, but also making sure it's not a feature and a sustainable company as such.
And that comes back to like modes, right? So I think one is team, and then one is like thinking that through, like, assuming everybody has perfect technology. That's like a thought experiment we often do. Like, if you think about the performance curves, the AI model would get like really, really good, like super intelligence, like different ways to talk about it. Like, what would that mean for the business? Would the business still exist or not exist? And if it doesn't exist in that case, then you have to ask you the question, is this like a good investment, thinking about like a venture fund that has a 10-year horizon where if you just think in what can happen in 10 years in AI, there's a ton of things that business might not be durable. So these modes are around like, like deep integration, like data modes, like other network effects as you add more customers, many more things that, add on, and then maybe gives you that defensibilities when others also come up with the same technology.
Yeah, I think you need to, people should look actually what happened with the internet. That wasn't all that long ago. And, with the, not the bubble part of it, but, in the end, who won, who lost. The major financial firms are still the major financial firms. You do have certain new players that kind of wiggled their way in, like PayPal. But, if you look at, for example, financial services, it sort of looks about the same before and after the internet. If you look at retailing, that looks totally different. But, the reason it probably looks totally different is that Amazon moved really fast and, wanted to get, but, then there are network effects and so on. Okay, so I don't want, to spend the whole evening talking about the internet story, but probably the AI stuff is going to play out in a somewhat similar way, for the points that you guys were making.
Yeah, I'm going to take the other side to make it exciting.
Okay.
I think financial services will not look the same, in my opinion, because and it has not just to do with AI. It has to do with, I think, the network effect of some of these technologies and some of these pools of capital coming in. So But I could be wrong. I think technology will democratize. There will be smart pools of capital, and I think you're one of them, by the way. That will sort of challenge the status quo of how banks have made money for a very long time. That's my opinion.
Yeah, but I think J.P. Morgan will still be a gigantic bank. That's kind of the point that
And I think just coming back to that, that's an interesting point. You see that we're moving towards a world where there'll be fewer, but maybe larger AI companies, larger AI, innovation, really. What sort of world are we moving towards?
When it comes to the base AI technologies, I mean, that's really a key question. So some people think that there will be, sort of a winner-take-all thing. Other people think that the foundation models, all of the know-how will converge and, will be quite democratized. Look, I don't really have a strong view on that, but I do think that there's a lot of pressure to make sure that there is not a winner-take-all AI outcome, not only within the United States, but globally. So, I think that, people learned certain lessons over how the U.S. became very dominant in the internet, with big tech. And, I just don't think for a bunch of reasons it's going to repeat with AI.
Absolutely.
Right? And so I think we're going to have a different outcome here, where it's AI's, the rewards of AI will be spread more uniformly than we got with, the first wave of the internet.
I think, Rasmus, you wanted to comment?
Yeah, I think there's going to be three types of AI companies or AI organizations. I think there's going to be one, the frontier labs, which, are at the frontier, raise tons of capital, have the distribution to somehow monetize that. I mean, I think there will be few. I don't think there will be 100. I think also research open source is catching up, and so for a lot of applications, there are other options, but I think that's one group. I think a second group are companies that have deep domain expertise, vertically or horizontally, in applications, ROI-driven, what you also see on the prominent. And then I think there's a third group, and that's kind of new, is kind of these solo entrepreneur companies, or I guess also within companies, people just creating a whole software application that maybe makes a couple of $1 million, whatever revenue, which is great for an individual, or within a company solves an application, but it's maybe not your classic company, because back in the days you couldn't build that. And so I think for me, most companies map into one of these three areas. And so then the question is where do you want to play as a fund? I mean, we mostly play in the second category, but I mean, others play also on the first category.
It continues to be a tough business to predict, actually. But I subscribe to what you said, that some of the large mega investments, the infrastructure investments, the LLMs and so on, we're going to have choice, and it's going to democratize. What's going to become very interesting is to see which company can grab those complex data, those trusted areas of workflow, and really capture market share. Because J.P. Morgan will stay very big, but does it need to employ hundreds and hundreds of thousands of people? As you can look back at a financial institution, 60-70% what it does is it controls, it risk manages, it reconciles. Those things, if you have to believe in the future of technology, will happen in a different way.
Yeah, and also, more likely than not, 10 years from now, when we're back in the room here, we're going to basically all admit that we were kind of wrong about how it played out. And
probably.
Yeah, yeah, absolutely.
Yeah, I mean, that's just what happens. And, so first of all, you shouldn't pay that much attention to what we're saying. But
right, guys. Drinks then.
Yeah, let's go to drinks.
It's just the way it goes. It's just the way it goes. You shouldn't feel bad about it, but I don't. But here's an example of something that could happen that's unexpected. And so, one of the great applications of AI today is coding. Okay, vibe coding. I personally have written, with a little help, 500,000 lines of code, in the last couple of months. Okay, I really have, or Claude did, and okay. So it's sort of interesting to reflect on what I just did. Okay, this was all for fun, essentially hobby projects of various kinds, and I kind of cleared out my 20 years worth of, I wish I could do this in my spare time. I did it all, over a few months. Okay. So then you reflect upon that a bit. And the conclusion is that, wow, the cost of developing software is plunging. Okay. It's plunging so much that, all of this stuff I wanted to have at home, that I essentially couldn't afford because I was too busy doing other things, now I've got. And okay, so now, okay, what does that mean for business? Okay, so what it means is that we should basically, everyone should kind of be doing in business what I was doing at home, which is to figure out all these things you wanted to do with software that you couldn't afford to do. And then that creates, incredibly, diverse set of new ideas. And, all over the place, because you just made the price, it's no different than when the price of CPUs plunged over my lifetime. Things that you would never imagine doing on computers, you started to do on computers, right? And so I think that the real opportunity that AI is bringing is plunging the cost of essentially, producing things that rely on software.
And Rasmus, do you, when you look at kind of the breakthroughs that's happening in this space, what excites you the most? Where are you seeing big opportunities, really?
I mean, to your point earlier, it always comes in areas you wouldn't expect. But I think there's still a lot in the robotics space. I think there's still a lot of unsolved problems. I mean, there's people trying to solve that very horizontally and realizing that works in simulation, but the real world is kind of hard. And and if you're in a factory, you want actually quite high reliability. So I think that's where a lot of happening. I mean, on talking world models, talking manipulation.
World models, could you explain that? Does everybody here know what world models are? Anyone here who does not know what world models are? Okay, so would you be able to explain it for a very simple audience?
Put, I mean, you could have an AI system on a robot, trying out things in the real world, but the problem in the real world is if you break something or you can't reverse back in time, so it's kind of very expensive and slow. So it would be great to have an environment where basically the robot brain, so to think, can think it through and try out all the different things to kind of explore options, how to act. And so that's basically the world model to build. And that needs to be obviously very realistic. And that's hard about the real world, because if you just think about perception, it's very easy to have an AI model to understand what's in the room here. But understanding how everything acts when I touch it, when I reverse it, what's heavy, what's the surface, that's hard. And so you need to have a physical concept of kind of the real world. And so that's what world models are about.
That's great. And sorry, I interrupted you there, but you were talking a little bit about the breakthroughs. And is world models, robotics, are these areas where you're really seeing those breakthroughs come, and also investment really coming in?
Yeah, I think there's a lot of investment in that area. I think that's super exciting. I think a second area we think a lot about is kind of, all the additional risk, but not from a policy regulation point, but more from a cybersecurity. If everybody can wipe code, attack people, fake people, what are these additional layers you need as a company to kind of defend yourself against that, or have some kind of, if everybody in your company vibe codes, which is great, how do you kind of orchestrate that as an organization? And so I think there's a lot of applications there, and people are still figuring that out. And then I think anything that goes beyond certain modality, right? We're pretty good with text, but image, video, there's still a lot to do. Also combining all these kind of types of data. And then efficiency, I think there's a lot of value if you make AI models more efficient. If you think about the trillions of dollars of GPU spend, if you make things a few percent more efficient, it's about a lot of money. And so I think that's also where every percent improvement is worth a lot of money, and it's exciting from a progress perspective.
Yeah, Rob.
Contextualize myself, financial technology, fintech. I think I'm most excited about the fact that the middle person, the inefficiency of the markets, have dominated financial service for a very long time. And I think we have a window. Will we take it? It'll depend. To democratize lots of stuff and to give very sophisticated stuff, and to bring it to people that, in groups or communities that deserve it. There were these lucky few that have access to these lucky few products that were tailored and very expensive, and that democratizing that in financial services is very powerful. Secondly, finally, maybe I don't like it, we're going to be able to attack some powerhouses that have been there forever and that are making tremendous amount of money out of inefficiency. So, and that's powerful. We're plumbers, so we kind of don't care who wins, but we want to bring basic infrastructure back, like a powerful network where people have manufacturing from products or financial products and distribution, and do that at a very low cost in a very efficient, very transparent way. The conversions of private to public, all those kind of cool stuff. I think we have a tremendous opportunity.
I'd like to give a little bit of maybe a reality check. So the capabilities of the AI that we've got today, especially large language models, which is primarily what people are talking about, are extremely impressive. And there's no doubt tremendous amounts of value that can be created from, even if the technology were just frozen as it is today. Then there is a class of problems. You mentioned some of them, robotics, humanoid robots. I mean, there's a lot of stuff going on right now where, look, in my opinion, I think people are somewhat misjudging the technology risk, that the gap between what AI that we have today can do and what people are expecting it's going to be doing, in 2-3 years, is bigger than might be expected by a lot of folks. And so I think one of the challenges, which is nothing new, it's always, in tech investing, you always want to take some tech risk. You always do. Everyone does. But the question is, how much? And do you understand how much risk you're actually taking? And so I caution people, look at it really. Don't assume that basically the progress from GPT-1 to 5, which was very rapid, is going to be replicated in every application. So there's a key challenge that we have today, anyone starting a company or investing, is in the assessment of the technology risk. It's hard. I'm not being optimistic or pessimistic. I'm just saying you got to do it.
Do you agree with that?
I think it's okay to think about risk. I think in Europe we think too much about risk, so that's why I like to think less about it. But I mean, it's a different type of risk.
Well, I'm not talking about
it's not like risk.
regulatory
it's more like,
risk.
I guess it's more like I think it's the hype versus reality. I think there is a lot of it gets very messy and complicated when you get into the real world. To our initial opening statement, and so I agree to your point that people might misjudge just because they see a 30-second humanoid clip that robotics is solved.
And I think that's also for think about retail investors as well, when they are being told by fund managers that you should buy these humanoid robot stocks. So there is a risk on that side as well.
But there, I think it's a tough decision. I think it's very hard to recommend somebody to invest in a venture as an individual sort of point of view, or it's very hard. I mean, I think if anything, I would more recommend you take a broader basket and then manage that risk. And you're confident that because the risk is massive, I don't think it's necessary.
And I think you have to understand. So many of you have probably seen the videos of robots folding clothing, which was sort of the holy grail of robotics when I was first involved with it in grad school. And it's very, very, very impressive. And I love it. However, if you kind of dig into it, it's also very brittle, and it's not just there's not a time to do a technical talk, but it's not clear how well that's going to scale. And the scaling of that is very different than the scaling of a large language model, because it's not the same underlying math. So that's all I was trying to get at.
No, and I think that's a good point, because I want to kind of dig deeper into that in terms of what separates these companies, AI companies that can scale and AI companies that actually hit the wall. What are the differences?
I think it's not about looking at the fancy demo or the one example that works really well. I think it's looking at, I guess, the performance metric or whatever it is to measure the algorithm performance and then map that to economic value. And in some applications, if there's a human in the loop, if I use an LLM to write some email, if it's 95% I read through it, I fix it, it's done. But if you have a manufacturing line and that needs to run 24/7, you can't afford the robot to fail. So there probably the economic value is pretty much zero up to a certain performance we have to get to, which takes time because it's diminishing returns as you get better and better and invest more money. And so I think doing that mapping for an application you invest in, and then based on that judging is the technology already solved to the point. I think there's a bunch of business problems you can solve with what's today, almost no technological risk, is more adoption risk.
Yeah.
But there's other things where you're it's not fully there, but we think we can get there in a few years. Maybe we have some ideas how we get there. Maybe some other people do it. We just implement it. But I think, and assessing that, I think that's the important job to do. And it's not about demos. It's not about algorithmic performance. It's about that translation to economic impact. And that's very different from application to application.
Yeah. Rob, did you want to weigh in?
Yeah. Again, in my context, it's more how dramatic is it and how sustainable is it, and which complexity does it solve, or is it just a feature that somebody's going to take over? If you really reinvent how we do, pick a number, how we underwrite credit or whatever, certain that could have a very fundamental impact, and you could have a mode there. You could have your proprietary data you rely on. You could have specific workflows. But it's very hard to predict. I mean, somebody who can call that something's hitting a wall, besides some hygiene question, I think it's a matter of time, and it's okay, as long as we can pivot quickly enough. And to your point, the flexibility of the founders to be able to pivot. I mean, all these companies that are successful had to reinvent themselves 5, 6, 7, 8 times. And you have to be quite pragmatic. That's why you can't give them too much money. I think the mistake we've made historically is give them too much money,
Yeah. Do you want to weigh in, David?
No, I agree. I agree.
That's great.
That's good. We all agree.
We all agree. We're done.
Can we go to the cocktails now?
We can go get drinks now. I wanted to address the elephant in the room, and I am a financial journalist, so I have to ask you all: is there an AI bubble? And should we expect a market correction this year? What are your thoughts? What are you hearing from the roles that you're in?
I don't.
Anyone? Whoever is ready.
Look, in the real world, which we live in, things go up, they go down. Okay, nothing just goes up and up and up and up. Okay, that never, ever, ever happens. And so, will there be a correction in certain AI valuations of some companies? Oh yeah, I mean, for sure. I mean, it always happens. But that doesn't mean, I don't like the word bubble, because bubble is a very emotional word. And, you start to talk about the tulip bulbs and stuff like that. Okay, so I don't like to use that word. But, are certain valuations of certain companies too high? Yeah, of course. And are certain valuations of certain companies too low? Of course. That's why people invest. And, is it going to be the case that some companies right now that are valued, quite high, hundreds of billions and so forth, could one day be valued at zero? Absolutely, that happens too. None of that means a bubble. There isn't even a great definition of a bubble, and so I just don't.
I think we journalists love to call it a bubble.
Yeah, because you're a journalist. But it's not really, because you can go back to the internet bubble and you say, oh, was it really a bubble? Well, the valuations went up, they went down, but look what we got out of it. It was pretty damn good.
Yeah.
And so some people lost money and some people made money.
But if the definition is, are we going to lose a lot of money potentially? The answer is yes. Are there some companies super overvalued? Yes. I think the question is, will the trust stay that we are going to continue to reinvent ourselves and reinvest? Because why is something worth 100 times revenue, even future revenue? Because somebody ran some models and believes that there's this massive growth potential, and they're going to be disappointed. The question is, if the bubble hurts people that invested that shouldn't have been investing and that are getting hurt. So if you look at, the retail people come into that and assume, and getting hurt there is painful. And if that's your definition of bubble, it's coming for sure. Of course. If your definition is nothing will remain, and everything reinvented after the dot-com bubble, if you think about it. And that was I think it's 10%. If you do the analysis, the impact of the internet is about 10% of what the impact of AI can be. I'm just talking from my business.
Yeah.
Mathematically, what the impact could be in fintech. So it could be 10 times as large, but I wouldn't call that a bubble, but a lot of people are going to lose a lot of money.
And a lot of people are going to make a lot of money.
Yeah.
And so, like with the internet, I've not done the math, but my guess is that the amount of money lost in the bubble is dwarfed by the amount of money made.
People are already making a lot of money.
After. And it's all about timing. But that's just investing.
Yeah, the only biggest risk, though, and for those who give away my age, I was part of a dot-com bubble, and my company...
So was I.
You shouldn't.
I was a bit younger.
Yeah, I have no idea what you're talking about.
And I had a company. We had to raise $240 million, and we hit this this block, and suddenly nobody wanted to invest anymore. It went from being a hero to being a zero overnight. So the whole climate changed.
Yeah.
And that was very detrimental for lots of entrepreneurs, for lots of companies that should have survived.
Yeah.
And on the other hand, some people should not have gotten so much money to build pets.com or whatever it was. So I think we've learned from that. I think money is more sophisticated now than it was then. I just hope that not a lot of people are going to get hurt that can't afford to get hurt, because that's what investing is.
Yeah, Rasmus.
I mean, like, I think the world will look crazily different in like 20, 30, 50 years, and I can't imagine how. But I think, like, you know, like taking a portfolio approach and investing a bunch of stuff in AI, like, you'll probably make a ton of money. Like, picking like one individual company or probably is like very hard, and like nobody knows. There's like a lot of different people with different opinions. So I think as long as you take a broad portfolio approach, like I think people will make a ton of money, but like it might go up and down. And if you have to sell then, or if you think you can make like quick money in 6 months, then it's probably not going to work. And that's what I like about venture. It's very, I mean, yes, we need, I mean, obviously the funding ecosystem needs to rally around, but it's a bit more, it's private markets, a bit more long term. So yes, it's obviously dependent, but it's less about like what does the market think about AI in 2 weeks?
Yeah,
I think the simple adage holds, which is FOMO is really what kills people, and fear of missing out, and so I think, look, the good news, in my opinion, with AI is this is going to be a long, extended period where lots of value is created. The opportunities to make money in AI are not basically closing out right now. And what happened with the dot-com stuff was really that it was FOMO, for sure, and that people were in such a gigantic hurry to get in, and there wasn't enough good stuff to get into.
Yeah. And the other thing with activities is the investors in the dot-com era, the people investing now massively in it can afford it.
Yeah.
We have much more profitable companies, so much of the capital coming from companies that can afford to have a setback, which is also a very big element of truth. Yeah.
I have one last question, and then I'm going to open it up to the audience. So please have a think if you have any questions that you would like to ask. But this is my closing question to you all, and I'm hoping that you're able to like put a crystal ball in front of you and think about what's ahead. But a year from now, if we're all sitting here again for a panel at AI House, what will we look back on and say that's when the AI narrative really changed? And should I start with you, David?
Well, so last year when I was here, everything was branded AI. This year, everything is branded agentic. Okay, so this is the year of the agent. And last year, that wasn't really on anyone's minds. So one thing I'm pretty sure about is all the marketing people will come up with some new branding for next year. And I'm not sure what it's going to be. But the joking aside, I think this rapid shift from, for example, building, essentially generic AI stuff, foundation models and so forth, to more agentic approaches, is actually quite sensible, but it's in the early days. And so I think that what we're going to basically see a year from now, but this is just a wild guess, but is a more perfection of the agentic approaches. That actually are actually looking to be quite useful. So I think that that's look, if I had to pick something, I think that's very promising.
Yeah.
I think like last year, 2 years ago, we were probably the AI House was probably the only place talking about AI almost in the street. Then like last year, everybody just put AI on there. This year, I think a lot is about like ROI with AI or business cases.
Yeah.
But it's still like, okay, we need to do AI, and actually we should probably do business case with it. I think next year will be, look, we have actually some numbers, and we saved actually some money. We made some extra revenue with what we're now doing with trying to push ROI with AI. So I suspect like more case studies of people like really bragging with like how much they made with AI.
That better happen, because if that doesn't happen, we've got a problem.
We need the marketing people. I mean, they will figure something out. I mean,
I have a scarier prediction.
Oh dear.
Oh, come on, Rob.
I think we're going to see evidence that there's going to be tremendous pressure on the labor market.
Yeah.
And we haven't seen it yet. I think it's going to, maybe it takes more than a year, but it's not going to be just anecdotal. Few people made some money. I think you're going to see some massive use cases. You have to your point. Otherwise, we're going to have.
And what are we doing?
Yeah.
Yeah.
But it's going to be so, I don't think we talk enough about it. I know I sound like we don't talk enough about the changing role of the human in this whole equation. Seriously, I mean, we just dismiss it. Oh, we find human in the loop, blah, 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 blah.
Yeah.
It's not that simple.
Yeah, and that's really interesting. And I want to open up for questions. I think to your point, I think I've been coming to Davos for a few years now. A couple of years ago, it was all about AI. I think you're right. It was AI House, and people were very intrigued standing in front of it, thinking, what is AI House? And wanting to get inside. And then it was AI everywhere, agentic. And then this year, there are three terms that I've heard, and tell me if you've heard them as well. But it's agentic AI, physical AI, and world models. These kind of have been dominating conversations, in many respects. So I think there's lots. Hopefully, when we come back again next year, we'll have more to talk. Maybe this will be a different topic, but more on AI. So with that, I want to open it up. I know you have a question, so let's start with you, and then we'll go to you. We'll get a mic. Please introduce yourself. Keep your questions brief, please, so we can get to as many questions as possible.
I'm Puneet Mehra. I'm a co-founder of a AI company. And my question goes more into where do you see the geopolitical risk of chip manufacturing, infrastructure, data centers, et cetera, and then also how the capital moves into these things as an AI investor?
That's a great question. Who wants to go first? Rob, I see you're thinking.
No, I
so
don't.
Maybe.
My mother said never talk about anything you don't know anything about. So I have to be careful. The latter part of your question is, I'm quite worried that the access to capital is still not present outside the United States in a serious way. It's amateur hour, and I can speak for larger countries, small countries. We talk about it a lot, but the culture is not there, and nor the capital, nor the willingness for people with large capital pools to come into those markets, although they talk about them a lot. I'm nervous, geopolitical, as probably everybody's. I read the same thing that you do. I don't know, but the tension's rising every freaking day. It's sort of kind of, and you could say, yeah, I know, Rob, you misjudged. We haven't lived in more peaceful time than ever before. But I'm quite worried. I'm going to pass on the infrastructure.
Anyone else wants to weigh in on that?
Well, these are all big risks. I think over the course of 1 year, which was the time frame that you gave, not that much can change. That's pretty short. I think over like a 5-year period, what I would expect is going to happen is that China's going to continue to push really hard on open source models, and that those models, if things just kind of continue as they are now, those models are going to be used, well beyond the walls of China, because there are many reasons why open source models are desirable. I think that Europe is, my guess is Europe is going to get, put a stake in the ground and do something, because they're going to feel that it's just a European security issue. They can't just outsource AI to China and the United States. And I think that in the United States, I think it's more of the same. That it's going to be a bunch of companies trying to push closed models. Even Meta is now, essentially going in that direction.
Yeah.
And so it'll be very interesting to see how this plays out as to whether or not, ultimately the closed source approach, is something people are willing to bet on,
Yeah.
or if people will find that the open source stuff is actually quite good.
Yeah, I think we'll go to the next question. We've got lots of hands, so.
Hey, good afternoon. Robert Newland. I'm actually an investor with Pandatron.ai, a Finland-based company, which I'm not from there. You can tell by my accent, I'm not Finnish. From a private capital market standpoint, especially early stage, pre-seed, are you seeing the same kind of appetite, if you will, or are we seeing more of is the ROI really there, and we need to think not twice but thrice maybe in what we're investing? What is? I'm not speaking necessarily for your funds, but what do you see overall?
Rasmus, do you want to?
Yeah, also relating it to the previous question, I think Europe was in a deep sleep. I think now, since a year ago, we're in a light sleep. I think soon we'll wake up. So I think we're getting there. And yes, I think there's a lot of appetite in the early stage. I think we don't have an early stage problem in Europe. I think there is enough capital, and it's also getting cheaper to get started. I think where the question is like the growth round, like 20, 50, 100, 200, 500 million. I think that's where there's still less capital, but capital is also efficient where there's money to make. So I think we have now, there's Lovable, Paloa, Helsing, lots of great, big European companies that scaled incredibly fast. So I think there's a point that you can make money in venture, and I think that's very important. And so I think yes, we see a lot of capital flowing in, and I'm quite optimistic. But I don't want to talk about all the problems we have in Europe. But I think we'll figure it out.
That's the only risk when there's a massive pullback and there's the perception of a bubble. And by the way, journalists, rightfully so, have to write certain things to get your attention. And my apologies. And as a result of that, the whole notion of the emotional reaction to that. If the dot-com, forget the money you lost, there was just no capital for ideas for 3-4 years. Nothing, zero, zip. So that would not be a good thing. But I don't see it. I see the opposite. I see people being more comfortable, again, but maybe more spreading. I think you're going to, there's also a whole channel we haven't talked about. It used to be institutional investors that went into venture capital. Family offices gone in significantly, but we haven't used any, I mean, in the US, they're deregulating some of that stuff, and there's a massive amount of flow coming in from the wealth channel, which could double the access to capital in venture overnight.
Okay, let's try and let's try here, and then we'll go to the gentleman over there.
So, good afternoon. My name is Emmanuel Boujon. I'm in the family office business, and we've been talking about risk. For me, something I'm always surprised is nobody talks so much about cybersecurity, and I think you gotta really take this out of the AI. And to me, I see this as one of the biggest risks. But most of the time, a lot of people are looking at the output, and what do you do really with data, and how far you can dig into this is one of my main concerns. And I'm always shocked that we don't really focus on that. And I was wanting to get them a take on that.
David, do you want to weigh in?
I think that from the AI perspective, I think that you make a good point for sure. I think the risks that the internet created in general were so by connecting everything together, you created a whole new set of security risks, right? So the first big problem that we had was, hooking up everything to the internet, okay? And, people are beginning to deal with that, but there's still a lot of, critical stuff that's mostly exposed. But now we're going beyond, and we're actually allowing AI systems already to, make decisions and do things, okay? That's the agentic kind of direction, and we're going to move even faster in that direction. And so it opens up a whole new set of potential dangers because, like right now, like you have problems that the power grid might be able to be compromised, where someone could get into a microcontroller and turn off a transformer, okay? Now you'll be able to get into AI systems that are actually making decisions and change how they make the decisions. Yep. And so these are, new risk factors that people haven't focused on all that much. So I agree with you.
I feel like that's a conversation. Sorry, go on.
Yeah, no, it's fine. To be fair, when we do an investment, there's a very important part of that always, and it's a killer if we think, but the vulnerability is there, but we do use it in our investment thesis as one of the potential reasons not to do an investment.
Yeah. I think there was a question, over there, and then we'll come to you, and then I think you have there as well.
Do we stand up? No. Hi, this is Vadim. Congratulations on an awesome panel. I think it's the best one I've been to this week.
Yes!
Yay, we did it!
Throwing in a light-hearted and selfish question before we go to cocktails. So I'm an entrepreneur, and I'm starting again. And judging between the lines of this year's agentic, next year's ROI, I'm assuming it's not going to be a bubble, but let's put it an investor dead zone where people would be more reluctant to invest between now and next year. So I would love it if you could tell me your predictions of by which month should I close my funding round.
That's a great question.
Tonight. No, but there's something to be said.
It's a good segue. I'm actually looking at AI risk insurance. So.
And I actually studied engineering science with this guy. He's very smart. So.
Okay, all right. Be careful what you answer.
But so quickly, as I'm an entrepreneur by background, so I always want to do today what I make sure that I do it today, what could happen tomorrow. So I have that nervousness, and I think that's good for an entrepreneur to do it sooner than later, always. I don't think all the predictions in Davos have been wrong, by the way. Somebody did that math for 20 years.
Right.
All of them, including ours, sadly.
Yeah, no, including us.
So close tonight, yeah?
Okay, all right, there you go. You've got a question.
Lovely panel, thank you. My name is Ayush. I'm the founder of Spacebar AI. Question for you folks. I'm sure you get pitched hundreds of companies. What is the pitch that you're wanting to hear? What companies are you wanting to see that you haven't seen?
What's your dream pitch?
Oh, that's a good question to close, eh?
Yeah.
It makes us all... I think for me always, it's interesting, it's been about the person and the individual. So, and sort of like the first 15, 20 minutes of a pitch, it's the behavior, it's how passionate they are, it's how much they know, it's how badly they want it. And I've been pretty happy with people I've backed historically, so I haven't waited for the perfect entrepreneur because they don't exist. But you learn a lot over time. The only thing I would caution, the older you become, and the more experienced you become, the lesser investor you become. Because you have that beginner's mind goes out and you think, I've seen that pattern, that doesn't work, that doesn't work. And before you know it, it does work. So it doesn't work until it works, it doesn't work, it works until it doesn't work. So that openness of willing to embrace the person and believe in the future is, I think, my fundamental reason for why I get still excited to meet entrepreneurs, yeah.
Rasmus, do you want to weigh in?
I mean, I think fully signed to that. I think that was a great summary on the founder side. I think the second thing is like actually be not so constrained. I mean, there's so much stuff you can do with AI. Like, yes, we have a list of like hundreds use cases we find interesting, but I'm always every day surprised by like new things and business models and go-to-markets and kind of technologies we're getting pitched that I think trying to keep the bias out as much as possible, but then still phoning on the founding team because like, yes, lots of founding team breaks up. People, yes, it's easy to build a prototype. Building a company for 10 years is incredibly hard. So pushing it through, how badly do they want it? Do they really care about solving the problem? Are they aggressive enough? And can they attract great talent? That's almost like non-AI specific, right? So I think that's also the thing. Like, there's so much hype right now, so it's very easy to subscribe to these hype words and be like anything that has these buzzwords, like I don't know, world malls on it is like fundable, like there's also, in the end, you're still investing in a legal company, give them money, they run a business. At some point, they need to make a lot of money or get sold and pay some money back. So that's still the simple business we are in.
Yep.
And it's good to kind of tone it down and kind of think about that.
Rob says don't give them too much money, so I'll remember that.
Yeah, remember that.
But to you, and then I think we'll do one last question, but I would love to get something from the back. It's a very quiet lot at the back, so maybe you and then one final question.
Hi, I'm Karthik Makwili. I head AI at an energy trading firm in Geneva called Mercuria. I'm curious, like, what's actually changed in the hedge fund world with the new generation of AI versus, we've had machine learning in the past, deep learning, now LLMs, generative AI.
Look, it's kind of hard to tell because people don't just advertise exactly what they're doing. But I think that
you should open source. To your points earlier, I mean, we would love that.
Yeah,
Too secretive.
Exactly. I think that I don't see it being any different than any other industry right now, where basically everyone is now in essentially the experimentation stage, where they're trying to see what the tools can do. They're all convinced, right? In pretty much any industry, everyone's convinced that there's got to be use cases that make the business better, that improve productivity, and so there's a tremendous amount of experimentation going on. One thing that gives me optimism for why AI will be very impactful is it's not. I don't think this is circular logic, but it's because people think it's going to be very impactful, and the fact that that's kind of universal. I haven't actually heard anyone be brave enough to say that they don't think it's going to be impactful, but I think people sincerely believe it. So in any industry that relies on information, investing is one of them. At the very least, the large language models are really good at processing unstructured information, and so there's all kinds of applications that you can imagine LLMs are going to be used for in any kind of knowledge-based business, and so I think that's what I see.
That's great. And I think we have one last question in the back.
Yes, thank you. I'm Apolline, the founder of Chief of Time, and I'm trying to replace one of the oldest jobs in the world, selling, to basically replace what I used to do at Google and Salesforce, because I think the issue with sales and marketing, it's at the cost of innovation. Like if you reinvest half of your revenues into sales and marketing. But I'm sure you have a lot of reasons of why it wouldn't work. So I'm curious to know, what do you think will remain the human moat? Like what is the part of B2B selling that will not be replaced by AI, or you don't want to?
I think it's going to be the one we chose. We choose as a group collectively, either through. It's a choice. I think it's a choice for us. I can use any use case that the people doesn't have to be in the loop, and I can make a use case they always have to be. I mean, Mark Benioff's forward in the Timel commercial is actually spot on, I think.
Either of you would like to weigh in?
I think it's the end of the day.
That's a good way to end. Thank you again.